Good morning, everyone. Welcome to our Employment Practices Liability webinar. My name is Anae Agostini. I'm CEO of CID Insurance Programs, and I want to take the time to introduce Corey Comstock of USLI. She's kind enough to be our webinar instructor this morning, and you are also it's great to have Dan Mulligan, who's our professional lines underwriter here at CID. Let's get started by talking about what our objective today is. So we just want you to be able to understand the best way to communicate the importance of EPL to your clients and learn a little bit about how to educate them enough where they understand they need to purchase the coverage. A couple webinar logistics. All of you are muted, so you won't be able to speak, but you will be able to hear everything. There is a place over on the GoToWebinar bar where you would type your questions in, and we will be answering those at the end of the webinar. So I'm going to pass this over on to Corey to get started with the webinar. Thank you for joining.
Great. Thanks, Anae. Thanks for having me here. You will see our agenda here on the slide for the presentation today. We are going to discuss what EPL is and a little bit about the history of the coverage, what is actually covered under an EPL policy, what the opportunity is out there in the market, and the ease and the speed of being able to quote this with CID and USLI. So what is EPL? Employment Practices Liability is a relatively new form of liability insurance. The first policy hit the market in the early to mid 1990s. And it provides protection for an employer against claims made by current employees, former employees, and also even potential employees. So you have, applicants coming in, interviewing for open positions. They would also be covered under that definition. It covers discrimination, wrongful termination of employment, sexual harassment, and other employment-related allegations such as the wage and hour violations, and also violations under the Family Medical Leave Act. So these allegations of discrimination, harassment, and wrongful termination have increased dramatically over the years, and the cost of defending these lawsuits can have dire financial consequences on businesses. So with EPL, especially with the small businesses, it tends to be more of a frequency issue rather than a severity issue. But that doesn't mean that these claims aren't expensive, because they certainly are. It's just that we tend to see a lot of them, a lot of the smaller claims. But the cost of defending even a frivolous claim is still very expensive. Depending on where the insured is located, we're spending about $15,000 to $25,000 in defense costs alone just to get a frivolous claim dismissed. So where do EPL claims come from? So there's the federal laws, such as FLSA, the Fair Labor Standards Act, FMLA, the Family Medical Leave Act, and also Title VII of the Civil Rights Act of 1964. So this is what actually created protected classes. So it prohibits discrimination based on race, color, religion, sex, national origin, pregnancy and hiring, firing, compensation, and in any term or condition of employment. From 1964 until it was amended in 1991, these claims were always brought before a judge, and historically judges were more conservative in the awards that they were granting. So it kept the severity low, and they were a little bit more predictable. But then in 1991, when it was amended, the law was broadened. The plaintiffs were now allowed to bring a complaint in front of a jury of its peers. And so this actually led to these claims becoming more unpredictable. And that's what brought on the first EPL policy. So the insurance company saw a need for the coverage of these claims to protect businesses, since they were so unpredictable and the awards were much higher than they had ever been historically. So then the state laws are typically going to be broader versions of federal laws. So for example, the federal minimum wage is lower than some states' minimum wages. And this makes the burden on the employer, that much greater, because they need to keep up with all these laws, and they're constantly changing. And if they have locations in multiple states, they have to be familiar with every state-specific law. So EPL claims can even be brought by customers or vendors of the insured. So your basic EPL policy protects against wrongful acts committed by one employee against another employee. But what happens when, say, in the case of a retail store where the majority of the business is happening in front of those that are not employees, that are a third party, such as a customer? So what happens if there's a sexual harassment claim made in that context? And this is where third-party coverage would be triggered. So third-party EPL coverage addresses claims made by non-employees that are against the insured that arise from acts committed by employees of the insured. So they generally allege some form of discrimination or harassment. In the example of the retail store, so as long as the wrongful act is being committed by an employee of the insured, and the insured has purchased third-party coverage, then there would be, potential coverage for the claim. But if the harassment, was from one customer to another customer, those would not be covered by third party. The harassment would need to be from, say, a salesperson at the store. And we had one claim where the insured, it was just a consulting firm. They had an office, and the insured hired his mother-in-law to come in and sit in the reception area and just, greet, their clients as they came in. And she ended up developing, a friendly relationship, or so she thought, with the UPS delivery man that was there, on a pretty much daily basis. All of a sudden, he stopped coming around, and turns out he filed a lawsuit. It was a hostile work environment and a harassment complaint, because we ended up finding out that the mother-in-law started singing the song "Who Wears Short Shorts" every time he would come in. And, one day that just set him off, and we ended up spending about $40,000 to settle that claim, where, she was not doing anything intentional. She thought that they had a good relationship, but just the one day he took it, the wrong way, and that led to, unfortunately, a pretty sizable claim for us. So why is EPL so important? The Insurance Journal put out a study a few years ago that an employer is actually more likely to have an EPL claim versus a general liability or a property claim. And, general liability policies don't cover EPL, and if they do have an endorsement for it, it tends to have very low limits. So, $10,000, $15,000, $25,000, and it's also really watered down coverage. So, it may offer just defense of discrimination or harassment, no other coverages, there's going to be no indemnity, and they definitely don't offer any third-party coverage on those. So, again, why is EPL so important? It's just, the cost to the employer. These are very costly claims. You can see the stat on the slide that the average time it takes to process an EEOC investigation is about 229 days. And these claims, they just have a very long tail, and that means, lots and lots of billable hours by the attorneys and the lawyers that are, both defending them and bringing them with the plaintiff. So the average defense cost alone for defending an EEOC charge is around $15,000. Another statistic up there. 16% of claims that make it to court have a settlement of over $1 million. So as I mentioned earlier, we're spending anywhere between $15,000 to $25,000 to defend a frivolous claim, but it's usually more like that $150,000 to $250,000 for the ones that do have a legitimate merit behind it, and that they tend to drag on for a while. So here are some of the claim trends. Over 40% of EPL claims are brought against private employers with less than 100 employees, and those are definitely the ones that they think that they don't have, an exposure. They don't think that their employee count is large enough. And these smaller companies, they don't, usually have that amount of money to be spending, and a lot of times, it just can put them out of business. So 67% of discrimination cases settled by jury verdicts are in favor of the plaintiff, and the median jury award is about $250,000, and then plus, the possible punitive damages that are being assessed from that. So other trends that we're seeing here, these website disability claims, they're popping up. So those are, someone that is hearing or visually impaired. They don't have access to the same benefits that are on an insured's website that someone that doesn't have the disability has access to. We're also seeing a lot of the transgender claims, and then the wage and hour claims we're seeing a lot of as well. So these are a few of the top coverage features to look for in an EPL policy, and this slide is specific to USLI's EPL product. Other carriers' forms may vary in what they offer. So one of the most important coverages that USLI provides is our FLSA. We have a $100,000 sublimit for both defense and indemnity of these wage and hour claims. So these are the claims, you're misclassifying an employee as, exempt versus non-exempt. You're not paying them overtime. The Department of Labor comes in and you just owe, 3 years of back wages to one or more. Usually, if you're doing it to one employee, it's going to be multiple employees. So we offer this coverage in all states except for California and Florida. It is included for no additional premium. This coverage is unique because most other carriers do offer defense costs only. And so offering the indemnity is really how we're broadening our coverage. There's typically not a whole lot of defense in these claims. It's the Department of Labor. They come in, they say you owe $60,000 in back wages, and that's typically, what you're going to end up owing those employees. And our average cost to defend these claims have been around, $10,000 to $15,000. But on the indemnity side, that's where the real costs are coming in, and we're averaging about $40,000 to $50,000 in loss on these. So defense costs are outside the limit of liability and uncapped, which is very important since we spoke about how the defense costs can just really accumulate over time since the claims can drag on. And you don't want these legal fees eroding the limit that is there to pay out for any of the indemnity when or if the insured is found liable. We have a duty to defend, and we will assign panel counsel that specializes in employment practices liabilities. We have panel counsel all over the state, so they are familiar with all those state-specific laws, which is very important. We have a 75-25 hammer clause that is in favor of the insured. We offer full prior acts where available. This is available in most states and for most classes, even for a first-time buyer. And then punitive damages where insurable. So there's a handful of states that don't allow insurance companies to indemnify the insured because these damages are intended to be a sort of punishment for the insured that has done something wrong. California is one state where they are not insurable, but we do offer most favorable venue wording, and this means that the insured If the insured is based in California but has a location in another state, and that is where the claim is being brought, and it is allowable in that state, then it will be covered. So this slide shows underwriting considerations. So, when quoting EPL for an applicant, what are we looking at in order to determine how to price it and what coverages we're going to be providing? So first and foremost, we will be looking at the type of business. Generally, the higher the salaries at a business, the more severe the claim is going to be. So if you take a retail store, versus a law firm, they are going to be rated differently because the law firm's exposure tends to be higher. We will also look at the location because, as I mentioned earlier, some states have broader employee protection than others, so really no two state jurisdictions are the same. So a retail store in Iowa is not going to be rated the same as it would be, say, in California. We're looking at the management experience. Do they want any subsidiaries or affiliated firms covered? We would be able to provide them all in one policy when there's common ownership between all of them. We rate on the number of employees, and that is broken out by full-time, part-time, seasonal, temporary, and independent contractors. Independent contractors is covered. They're included in the definition of an employee. Salary levels, I mentioned the financial condition of the organization and also management practices. So do they have proper policies put in place? Do they have anti-discrimination policies? Do they have anti-harassment policies that the employees really should be, following these guidelines? And then, of course, we will look at claims history. So while we do understand that claims happen, as I said, this is, more of a frequency issue with this form of liability. And we know that there's a lot of frivolous claims out there. What we are looking at here is going to be the severity. So what actually happened, and most importantly, what are they doing to prevent it from happening again? What remedial measures have been put in place to prevent, similar claims in the future? So what are you doing currently to sell EPL? It is different from selling other lines, general liability and property. Clients don't always see their exposure for EPL, and it's not going to be required by any contracts. E&O is really contractually driven, and, property coverage is going to be required if they have a mortgage on the building. So it's a different type of insurance, when you're trying to explain what their exposure is, and they don't really see a need for it. So are you currently including an EPL quote for every risk when providing other lines of coverage? And are you having success? What percentage of customers are actually purchasing it? We found that in the U.S., only 1 out of 5 employers carry this line of insurance. So there is a huge portion of the market that's not purchasing it. And I think we've already established that they really should be with all the costs and the defense costs alone for the frivolous claim. So are you offering EPL, or are you really selling it? Are you going out there and saying, here's this coverage that's also available, or are you really explaining to the insured what their exposures are and truly selling it? So the typical sales model, the producer will offer EPL as part of the quote, but like I mentioned, it's not really sold all the time. It is included in the conversation, but there's just not a whole lot of time spent on it. Then the insured makes a quick decision. Again, like I said, a perceived lack of the exposure. We hear clients say, we're a really small family-run business. No one's going to sue us. Our employees all get along. We're like family. But we've certainly paid out on multiple claims where employees have worked together for over 20 years. They always got along, and it's just one day, like I said, it's just one employee takes something the wrong way, and, that's where we see a lot of these claims arising from. So there's also, mistakenly assumed adequate coverage. like I mentioned, the BOP coverage, but that really is a false sense of security for them. It's not going to pay out on many of the claims that they would see. Or, they just don't understand what the policy covers. They don't understand what laws are out there and how the state laws can be different from federal laws. But more often than not, it comes down to the cost factor. So our average policy premium countrywide is $2,800. And, I think, again, we've already established that, defense costs for a frivolous claim being $15,000 to $30,000, this really does provide peace of mind to the insured because, again, it takes one upset employee, and we've already established that it's a frequency issue. They're more likely to have the EPL claim than a GL or property loss. We say it's not really an if you're going to have an EPL claim, but more of when are you going to have an EPL claim. So more often than not, the insured declines to purchase the EPL policy, and unfortunately, the interest only arises after they've had their first claim. So at that point, it makes the account much harder to place, and it's going to be, more expensive. And like I said, the coverages may be more restrictive. So it is really important that you're selling the coverage before their first claim comes in. So is EPL insurance alone enough? How would a small employer get answers to their employment-related questions, such as, hiring a new employee that might have a disability, or they aren't sure how to classify someone, they don't know what the minimum salary required for an exempt employee is, or someone just requests to take FMLA leave to care for their sick husband. A lot of people really only affiliate the FMLA to a woman going on a maternity leave, but there are a whole lot of other, exposures that are covered under that regulation as well. And most employers don't have an HR department, especially these smaller businesses that we see with less than 100 employees. They're not going to have a lawyer on staff to consult with to get answers for these questions. And then keep in mind that the state and federal employment laws are always constantly changing, and it's difficult for these businesses to keep up with them, and it's very easy for them to make a mistake. So they basically have two options. They can call a lawyer, an outside lawyer, and that doesn't usually happen since these calls can be anywhere between $200 to $300 per hour. But unfortunately, what does happen is that they guess and they get it wrong, and that's what's going to lead to these EPL claims. So an alternative approach, you're selling more than just insurance when you purchase these policies. We want to educate the insured and explain their EPL coverages, but UFLI doesn't want to just be issuing thousands and thousands of policies year after year and just sit back, cross our fingers, and hope none of our insureds have any of these claims. We also want to provide them with risk management tools. It's really important for them to have an avenue to get answers to the HR questions and hopefully prevent that claim before it even happens. So there's many different vendors that different carriers use. We use a vendor called People Systems, and it is a completely free and unlimited confidential HR hotline where our insureds can call and they can get qualified advice from a trained HR consultant. So as I said, the idea really is to give them this avenue to help prevent the claims or to mitigate maybe a potential situation that's arising, but then also to have a very broad EPLI policy in place in case that there is a lawsuit that does come in. So we want to thank you all for joining us today. I hope this was very educational for you. If you'd like to start typing any questions that you have, we can open it up to that, and send us your EPL submissions today. We make it very easy to get a quote. There's only 4 pieces of information that's required. to review these accounts. We only need the name, the location, the class of business, and the number of employees. So it's really fast. It's simple. You can get a quote the same day. It's, phone quotable, web quotable, or, Dan Mulligan's contact information is up there. You can feel free to give him a call with any questions or accounts that you have as well.
What I have done in the past is if you want to cross-sell EPLI, just give me a call or just shoot me an email. Just give me the name of the risk, their address, how many employees, full-time, part-time, confirmation that they don't have any claims, and we can get a quote for you immediately. So this way you don't have to fill out applications and so forth there. And another thing that's great about the program that we have with EPLI with United States Liability is the fact that we're able to pay a little bit higher commission. Instead of a standard 10% commission for our EPLI with USLI, we're actually paying 15%, which is beneficial to you guys here. We wanted to thank you for attending our webinar and let you know that there's going to be a survey at the end where we're also going to be recording the webinars, and it's going to be posted on our website. So at any time that you can, call, you can go to our website and hear it in case you missed anything on there. And we're going to have some future webinars coming soon. I believe the next one's going to be on cyber liability there. So you can always check our website under our resources page there. And if you have any questions, definitely let us know. And I know Corey, we have a question there if you want to answer it in regards with the 75-25 hammer clauses.
Oh, sure. So a hammer clause, in general, this is considered a softened hammer. Basically, what it does is if we feel that we could reach a reasonable settlement with a plaintiff, but the client wants to keep fighting, we would invoke a hammer clause which states that at that point, going forward, we would cover 75% of the cost of defense and the indemnity, and then the insured would be responsible for that other 25%. That is only from the point where we thought there was a reasonable settlement going forward. So again, this is a softened hammer clause. Other carriers have, an 80-20 maybe. But there are carriers out there that have a hard hammer, which would be at 100%. The insured would be responsible over that the reasonable settlement. So this is definitely a good thing to have in there.
Are there any other questions out there? Well, we wanted to once again thank you for attending, and then we'll also be adding some claims. Excuse me. We'll also be adding some claims examples on our website, so we'll probably have those uploaded on our website within the next few days. Once again, thank you so much for attending.
Yep, thank you.